Let's just go across to our market guests now to find out what we should be buying or selling in this market and how to approach this pre-budget period. Sanju Verma of Violet Arc Global Managers joins us now to talk about that. Hi Sanju, good morning. Good to see you in. What's the feeling you're getting about the markets now? I mean, we've had a pretty good run-up so far, but now it's stalled a bit ahead of the budget. Do you think we could still eke out a pre-budget rally?
Sonia, the fact that this is a secular multi-year bull market now seems to be a no-brainer and a given. From asking questions last year as to whether the Nifty will cross 6,400, which is where it has plateaued, over the last 3 to 4 years. We are now asking whether we will touch 8,000 pre-budget or post-budget, and whether 10,000 on the Nifty will be, by March 2015 or even earlier. So much for positive sentiment. Coming to your query, I think first things first, specifically talking about the market direction in terms of momentum, I think the key thing to note is of course the expiry tomorrow. Yesterday we had a brilliant run-up after 4 consecutive sessions of losses. If we close positively tomorrow over today's close, then this is an observation, not a rule, that if on the expiry day the market closes higher than its preceding close, the next few days normally reflect extremely positive momentum and the markets inch up. So I will keenly await the Nifty close tomorrow. Should we close lower than today's close tomorrow, then I think the momentum will sag. Putting everything in perspective, I personally feel that given that maximum put writing has happened at 7,500 levels and a large part of call writing and call outstanding is at 7,700 levels, pre-budget it will be a narrow range between 75 to 7,700. I do expect a rally to 8,000, but I belong to that camp which believes that there will be a post-budget rally, not a pre-budget one.
Sanju, hi, good morning. That's an interesting one. Post-budget rally. So what would lead that? Would stocks like SBI and L&T lead that rally, as has been the case? You've been bullish on SBI, I think, from sub-2000 level. It's at 2,600 now. How would you be approaching some of these stocks, the market leaders?
Anuj, what will lead the rally, post-budget is the fact that I think while the Modi government is obviously being crushed under the weight of expectations, and the rally that we've seen so far is more aspirational than anything else. The fact of the matter is that most multi-year bull market rallies, they have nothing to do or very little to do with valuations. Liquidity does matter, but most importantly, it is sentiment that counts. And I think, I can corroborate that. I was on your channel, sometime last year when I said that I do not like L&T. And I think the broad market consensus was that nobody was willing to touch L&T at 850 rupees odd, sometime last year, at which it was trading at something like just 15 times price to earnings, which is the lowest that we have seen L&T trade at in the last 4 to 5 years. And look at L&T today, at 1650 plus levels. L&T trades at something like 30 times current year earnings and about 23 to 24 odd times 1 year forward. And you will still have bulls saying that, it's great to buy cyclicals when the P's are high, and, that basically tells you that there's headroom for more. So the point I'm trying to make is that there has not been a 180-degree, but a 360-degree shift in sentiment. And I think, we've not even seen a large part of the global liquidity coming in here. I think that's still to play itself out. I think if you compare the liquidity flows that have come in, particularly from FIs, I think if you extrapolate the money flows that we've seen now, vis-a-vis say what we saw in 2010 when China pulled in $50 billion and India pulled in something like $29 billion. Compared to that, the liquidity flows still have a lot of catch-up to do, though of course a large part of the year is still ahead of us. I think what will lead the rally is the fact that this budget will be short on rhetoric and it will be long on doables. I think instances of the last few weeks with the Modi government barely being in the seat for a month, bear this out. Be it, a radical step like deciding to do away with all the 85 EGOMs, which was nothing but a superstructure over and above the PMO, or be delisting fruits and vegetables and thereby ensuring that farmers get the best price for their produce and curtailing thereby the powers of the APMC, or deciding to go ahead and increase the price of kerosene by 1 rupee a litre, which of course will curtail under recoveries by only 850 crores or thereabouts.
So
but the fact
Sanju,
of the matter is that it sends out the message that this government means business.
Yeah, Sanju, sorry to interrupt you. So how much of an upside do you see in stocks like ONGC and BPCL? ONGC and BPCL, what kind of an upside do you see now, given the rally that we've already seen so far?
BPCL, I think the best is yet to come, Sonia, because remember, the delta that we are talking of here with respect to even a minor uptick in marketing margins can be phenomenally and disproportionately huge. While the diesel under recoveries today are just about 1.62 rupees a litre, so there's not too much to go. The fact of the matter is that, assuming oil prices stay where they are, and diesel prices are hiked by 50 paise per litre, every month for the next 3 or 4 months. The increase in marketing margins for BPCL will be phenomenal. A rule of thumb says that every 50 paise per increase per litre in the price of diesel leads to a 20% jump, other things remaining constant, for BPCL. So I think, if you're assuming a 43 rupee EPS going forward, then the stock might, look expensive, given that, it closed at about 582 yesterday. But strip out, 180 rupees odd, which is what is the value that you would assign to its Brazilian and Mozambique basins. Then the stock is, trading pretty reasonably cheap as well, at just about 400 rupees odd. So on standalone numbers, stripping out the value of its, overseas gas fields, I think this stock still has a long way to go. So while it may not be as attractive as it was, 1.5 years back, when the markets were in a period of trough and when the dividend yield for some of these OMCs was anywhere between 10 to 20%, now you're not going to play these stocks for dividend yield. Now it is capital appreciation which is going to fuel, the rally going forward.
Okay, Sanjay, let's talk about some mid caps. I believe you like Arvind. It's a stock which has had a vertical rally. I think it's trebled in last 1.5 years. What's the story here? Do you think it can replicate the kind of performance that it did in last year?
Arvind Limited, I think, Anuj, there's a lot going for it. It's true, there's been a gravity-defying move. It's run up 40% plus just between May and June as we speak now to 222 odd, which is where it closed yesterday. And there are still no signs of vertigo as far as mid-caps go, particularly companies from the textile space, which had been beaten down for the last 5 to 6 years and are coming into their own just about now. The reason I like Arvind is the fact that there's a whole restructuring which is happening. So this is a great proxy for anyone who wants to play the restructuring story, along with, of course, the denim story, the garment story, the fact that they are replacing smaller stores with large format mega market stores, with each store being nothing less than 10,000 square feet. The fact that they will have new growth brands like Nautica, Gant, Calvin Klein, where the margins are as high as 15 to 16%, and which currently don't contribute much to the top line or the bottom line.